Okay, perfect. So what we need to know about entertainment industry that it's very diversified area, and if you try to look at different companies, you will understand that they like run businesses in very different sectors of this entertainment industry, and some of them they're cross industry companies, so they kind of, you can call them internet companies, but at the same time they entertainment industry. And some companies, they, because they deal with several aspects of the business, you can say that, for example, Disneyland, they own hotels, so you can think about like tourism industry as well. Okay, so sometimes it's really difficult to put any particular company in one industry, but we can definitely tell that, first of all, entertainment industry, first of all, distribution networks. It's radio, satellite, cable TV, digital TV, cinemas, and etc. Whatever distribute the product of entertainment industry. The next one is content production. Okay, whatever produces movies, cartoons, TV shows, different musical program, etc. Right? Then we know a lot of now entertainment parks. There are entertainment cruises, hotels, and again different type of things like that. And then a lot of consumable products in this entertainment industry, and then of course licensing. Now, what we need to know about this particular industry, that at the moment they have very, very high barriers to enter. So if you decided to start any business, if you decided to start a shoe shop, it's very easy to, or retail furniture shop, whatever, it's very easy. You rent at the place and that's it, you open the shop. Now, when you're trying to get into this industry, it's pretty competitive. Why? Because in order to, for example, create a movie, you need to invite actors, you need to write a script, you need to like film all this, and it costs quite a lot of money. But on top of that, before you sell, you have to start advertising it like months and months in advance, and pay huge amount of money for this advertisement. And also there is quite challenging, because imagine how many studios in the world, and all of them, they want to try and fight for time in cinemas. So it's quite challenging and difficult to get into the mainstream cinemas in order to promote your own cinema. Okay, so it's quite competitive. And also, if you, for example, decided to run a network, uh, any media network, so in order to set this media network, it's quite costly as well, and then to attract all these customers, so it will cost you a lot of money. If you decided to build a park, huge investment before you get any reward. So it's kind of, from one point, is good for you like investor, because you can enter the company making sure that there wouldn't be somebody tomorrow, some other company which, like newcomer, which will take over this industry pretty quickly. So it's kind of a good and secure investment, but at the same time, in order to kind of develop in a new area, to grow into new area, company has to invest a lot of money as well. So you understand that whatever company is making, they might spend it in order to grow in the future. Now the next one, it's high level of finances, financial requirements to run the business. Okay, like for example, if somebody in France, for instance, there were terrorists there, and people were afraid to go to different, like, I mean, crowded places. And I have a friend, and he traveled there, and they say we wouldn't go to Disneyland in France, in Paris, because like we were afraid that it would be some bomb exploded or something like that. And imagine that if nobody came to this park, but Disney still has to pay for employees, run this park, and it's huge amount of money to run the businesses like that. Okay, and also before you promote any movie, you have to spend a lot of money for its production and also marketing before you get any reward, if you get any. Now, the next one, it's fast changing business environment, and it requires dynamic culture. So if you miss something, that's it. You kind of go on your path. And look what is going on now. Netflix is taking over customers, and it's getting customers from all other networks. And it's very important to understand, because that's where Disney and other companies in this industry, they have like troubles, and we're going to look and uncover it today, and we understand why it's actually Disneyland dropped in price quite a lot. And again, growth of companies is achieved mostly by mergers and acquisitions. Why it is important to know that company are growing by acquiring other companies? As an investor, why would you want to know this? Can you answer it in the chat box? So you can time when you buy shares. Yeah, of course you can time when you buy shares. And it's actually good when different announcement. In current cost, that's good as well because they can accumulate some income and then they will spend everything. So it's like it's gone. But also, why it is important, uh, that's a balance sheet. When you look at balance sheet, you always look at your value of the company or kind of book value, right? And or asset value. And very often, like not very often, every time when you buy something, you overpaying for this, and you're buying kind of it's you put on a balance sheet your goodwill, and especially if you're growing by acquiring other companies, so you can expect that the company which is buying other companies always has something in their goodwill on the balance sheet. And for us, it's very, very important how much goodwill compared to the total asset value. Because if you decide to sell this company or if the company getting like liquidated, you won't be able to sell this part. And for majority of investors, the growth in book value it represents the growth of their business because they see it like that's assets, that's what growing, and it's good. Now in our case we might see that it's only like air growing because it's goodwill. Nothing might be growing. So and for us very very important to understand how much of goodwill or intangible assets included in balance sheet, okay, in our assets column. We're going to have a look at this now.